Welcome to the Deep Dive podcast, where a German Shepherd reads SEC filings so you don't have to. You're welcome. Therapy is expensive. This is free. Roughly the same value. I'm Maple. Today we are talking about SpaceX going public. Yes, the rocket company, on the stock market, with normal humans. This is either the most exciting financial event of our lifetimes or the beginning of a very cinematic disaster. Possibly both, which is on brand for Elon Musk. The IPO is pricing at $135 a share. The offering is $75 billion, and up to 30% is reserved for retail investors. Translation, they want your money. Specifically, congratulations, you've been targeted. Now, investor Gavin Baker hit the nail on the head when he said it felt kind of like a high-risk event heading into an IPO. And why is that? Well, because this company's valuation essentially relies on giant explosive test flights of their Starship V3 rocket literally not blowing up right before the opening bell rings. So SpaceX filed its S-1 with the SEC on May 20th, 2026, and S-1 is a registration statement, a document so long and full of legal language that reading it is essentially a form of self-harm. Fortunately, CFO Brett Johnson also did a 48-minute interview at Mission Control explaining everything for people who don't enjoy paper cuts.
The core pitch: SpaceX is not a rocket company. It is a platform. Launch is the operating system, Starlink is the cash machine, Starship is the moonshot, literally. And they like you to fund all of it at a valuation currently north of $1 trillion. Bold. Very bold. Let's see if it holds up.
Section 1. Launch, the foundational catalyst.
Look, you simply cannot be a space company without assured, incredibly cheap access to orbit. Right? While the legacy Falcon rockets with their first stage reusability completely transformed the aerospace industry 10 years ago, Starship is built for full and rapid reusability. We are talking about the holy grail of rocketry here, aiming for actual aircraft-like operations to drive costs down by another 10 times. To understand the sheer scale of their current dominance, and this is before Starship even fully takes over, just look at this number, 165. SpaceX launched 165 times last year with their Falcon vehicles alone. And here is where their vertical integration becomes a literal weapon. Whenever there was an opening between launching third-party payloads, they ruthlessly filled that slot with their own Starlink satellites. Basically, they are their own best customer.
Section 2. Disrupting trillion-dollar telecom.
So here's what Brett Johnson actually said, translated from CFO into English. First, the good news. Starlink made $11.4 billion in revenue in 2025. That's 61% of the entire company, and it turned a $4.4 billion operating profit. The satellite internet business is, quietly, one of the most profitable connectivity operations on Earth, and also literally above the Earth, which I think counts double. Starlink has 10.3 million subscribers and over 9,600 satellites in orbit. It's growing at nearly 50% year over year, and it is, at the moment, effectively subsidizing everything else SpaceX wants to do, which is a lot.
Gavin Baker, who's a self-proclaimed serious video gamer, noted that traditional telecom relies on the same shared towers, has localized dead zones, and is incredibly vulnerable to natural disasters. It's exactly why your game lags or your call just completely drops on a road trip. But then you have Starlink, global roaming, lower latency, and immediate disaster recovery. The mundane annoyance of terrestrial dead zones is literally being solved by an extreme orbital satellite constellation. CFO Brett Johnson mapped out the connectivity roadmap for us. Step 1 was broadband internet. Step 2 is direct-to-cell. And Step 3, which is rolling out in the next 2 years, is 5G quality direct-to-device. I mean, just imagine having global roaming in the absolute middle of the desert or on the highest mountains with 0 dead zones beaming straight to the phone already in your pocket. No way around it, that's a game changer.
Section 3. AI compute, data centers in orbit. Now, the ambition doesn't stop at satellites. Johnson pitched orbital AI compute, basically GPU racks in space, riding a sun-synchronous orbit so the radiator stays in permanent shade. He argued space has structural cost advantages over land-based data centers. 5 times more solar energy per cell, passive radiative cooling, no land permits, and 0 neighbors complaining about the noise. To pull this off, SpaceX plans thousands of launches per year. That is not a typo. Plus, the XAI acquisition, completed in February 2026 in an all-stock deal, folded Elon's AI company and, through it, X, formerly Twitter, right into the balance sheet, which obviously added complexity and raised questions that Johnson handled with the calm confidence of a man who has been SpaceX's only CFO for 15 years.
Section 4. Starship, the revolution.
Starship V3 is literally the heaviest flying object ever made, with more than double the thrust of the Saturn V moon rocket. But now the expensive news. SpaceX has spent over $15 billion developing Starship. $15 billion. The space segment, rockets, launches, the exciting part, lost $662 million in just the first quarter of 2026. The company posted a $4.9 billion GAAP net loss for 2025. Now, Johnson was ready for that question and pointed to $6.6 billion in adjusted EBITDA, which is basically how you say, ignore that number, look at this better number in finance.
In fairness, there's a real thesis here. Starship's V3 flew successfully just before the roadshow, demonstrating new Raptor engines, full-stack performance, and a soft splashdown. Johnson says once the upper stage is caught and rapidly reused, cost per kilogram drops by another 10 times. Each V3 Starlink launch carries 20 times the payload of a Falcon 9. That math, if it actually works, is genuinely transformational. Then there's the target margins. Johnson wants to go from 49% gross margin to 70% and push net profit to 45%, up from negative 26% last year. Analysts heard this and their eyebrows absolutely left the building.
But listen, achieving this is brutal. The extreme barriers to full reusability include Earth's deep gravity well and its thick atmosphere, requiring absolutely perfect engines, structure, and avionics. This is exactly why most previous attempts by others were just abandoned partway through. Physics makes it just barely possible. To make it possible, you need extreme mass optimization. So instead of putting heavy landing legs on the rocket, they literally plan to catch a descending skyscraper-sized booster with giant mechanical tower arms. The tower catch. It is a completely mind-bending concept designed to save weight and enable true, rapid, aircraft-like reuse without laborious inspection.
Section 5. Kardashev scale, ascending it.
Okay, we're talking about the Kardashev scale here. This is a method of measuring a civilization's level of technological advancement based on its energy use. While most normal companies going public just want to hit their Q3 revenue targets, SpaceX is casually putting ascending the Kardashev scale right into their IPO materials. It's pure dark comedy. But the crazy thing is, they are dead serious about it. Because the fundamental truth is simple. You cannot extend life to the moon, to Mars, and the rest of the solar system without a reusable rocket. All of this, the telecom revenue, the orbital AI compute, the extremely aggressive financial targets, it is all just funding to make humanity multiplanetary. Achieving those numbers requires Starship flying frequently, reliably, and cheaply, all three simultaneously at scale, while also running a global satellite constellation, an AI compute business in orbit, and apparently a moon base called Moonbase Alpha, which sounds like it was named by a 12-year-old, and I mean that as a compliment.
So here's the honest read. The bull case is extraordinary. If Starship delivers, this is a platform company with no real competition on Earth, let alone in orbit. The bear case is that the targets are so aggressive they require almost everything to go right at once: engineering, operations, markets, and Elon Musk staying focused. 2 of those 4 are historically reliable. Before we land this rocket, subscribe. It's free. Unlike SpaceX stock, which starts at $135 a share and requires you to believe in orbital GPU farms. Share the show. Tell a friend. Preferably a friend with disposable income and a high risk tolerance. They'll appreciate today's episode. That's your SpaceX IPO briefing. I'm Maple. Thanks for listening. Now go read a prospectus. Or don't. I'll be here either way. Woof.